Okay, let's try that again. A very good afternoon, everybody, and welcome to our Thursday, June 30th Rubicon training. This is Frank O'Connor here from the Rubicon Trading Company, and welcome to everybody. Sorry about that, guys. I just got a little confused, not on your end or even on the regular audio. It was just getting set up for the Camtasia for the recording so that we have it for the blog site later. That's where I got a little confused. I have to wrangle several different things just to get everything set up, but we're all good. So hopefully everybody had a good week. Lots of interesting stuff going on this week. Obviously Europe, a very major player this week. Greece back in play. The two very big votes that happened in the Greek Parliament, both of them passed, and you saw what happened. The euro got this really big boost out of that. Let's take a look at the euro chart just as we speak about that. Let's look at 30-minute chart. You can see right there, last 2.5, 3 days, just pretty much straight up all the way from 142, and we end up above the 145 level. So about over a 300 pip run up right there. Go out to the 1 hour. You'll see that just this week alone we're looking at a 450 pip run up on the euro dollar. Most of that due to Greece, the big one, getting settled and agreeing with the austerity package presented by IMF and Eurozone, and also a hint at possible further rate increases in Europe. That's enough to drive it up as well. See that. Good morning, everybody in Australia as well. I see everybody checking in from down under also. So what we want to do, to recap, Tuesday webinars, we go over the TEF strategy and we look at fundamentals and also at the strategy. That's predominantly for our students. Many of you are former students as well, so you know exactly what I mean by that. And today, Thursday, we keep the focus on the Rubicon Indicator, how to trade it and how to maximize and look for optimal trades. I would say one thing, guys, as we get going. Please do pay attention to the things that I mentioned, particularly the drill down method that I'm going to mention right now, because what we're after is not just lots and lots and lots of trades. They are there, but what I'm trying to get you to focus in on is less trading but more quality trading, higher probability trades. You don't need tons and tons of trades to be successful at this game. Most traders who are successful have the ability to take a look at the market, be very precise with their entries, go in to the market for a very limited period of time, get their profit, and then take their risk out of the market and put it in the bank. Their money, that is, where it belongs. So the first thing that we do always before we go in to trade on any of our charts is to do the drill down method. Let's take a look at that again. Very simple. We always start out at the daily chart. I'll take that out. That's a trend line we had there from before. And I like to squeeze out the daily chart so that I can see a couple of years of activity. And you see what I mean by doing that. I get a grand picture. So I see that the Eurozone at this in April made it all the way up to that 150 level, and then she collapsed off that by about 1,000 pips. And I also note that it had been there before, back in 2009 December, and as a result of its failure to break through the 150 level, we had this massive 3,000 pip drop. I also see another level here. I'll take a note of just right there, which is the 142 level actually. There she is, around about there. Don't have to be real precise on the daily chart. We see the double top there, and the inability to break through that led to a 1,200, 1,300 pip drop. Now we can bring it, well actually before I leave there, I want to do one last thing on the daily chart. I want to do the following. Get my trend line back on. See it right there. And I also like to put a Fibonacci on. Let me do one thing. Squeeze that chart so I can see it. Yeah, there we go. In the direction of the prevailing trend, in this case going up from the lowest point to the highest point, drop and release. Now let's pull the chart out, see what information we can garnish from that exercise. Let's bring it out to the current time. So we see that trend line in play on our chart right here. We also see the high right there at that one, just below the 150 level, and the pullback of over 900 pips off that. The second attempt made it up to 147, and right now we're at the 145 level. So I do notice one other thing here, and I'll put a trend line on there as well, because that trend line is still intact, and you know, we could see a potential test of that tomorrow. No guarantee, but we could. I see also that the euro, like many times most of these currencies do, came back and tested that 23% level, and that found support there at that 23 level, which is around about the 141 to 142 level. Find support, breaks through slightly, never makes it down to the 38 fib, and then comes right back. And that finds support again at the 23 level in beginning and end of June, right there, double bottom, held by our trend line. So I garner all that information before I even leave the daily chart. Now at this stage I like to take off the daily fib, because I don't want too many lines cluttering up my chart. I simply know, and I need to note that in or around this area was a 23 fib on the daily chart. Yeah, Ken's bringing up the point too that the euro was stuck at this level back in January for 5 days, and again mid-April couldn't break the trend line on the daily one chart. Yeah, so that's very important, Ken, that and you've heard me say this before, and Ken's reiterating it there in that statement. If I see a trend line coming up, showing up on a daily chart, I really pay attention to it, and if I see it showing up on lower time frames, it very much gets my attention. So guys, first things first, if you draw a trend line on a daily chart, please have a specific color so that you know that it's a daily chart. And to do that, I'm sure many of you know, but just in case, just double click on the chart until you see these little diamond dots appearing. Then right click, go to trendline properties, and under common you can change the color, and I would suggest changing the color of lines for each time frame so you don't get confused. I'll leave it on orange there so I know that that's a daily trend line. Now the next thing I want to do, drop to my 1 hour. On the 1 hour chart, I like to see about 2 weeks of trading, and always remember the guide is your diagonal lines. These guys here, the double line is the separation of week to week. See it coming into play there. So I like to see 1-2 weeks of trading, which we got here. Make sure I'm going into prevailing trend from reading the chart from left to right. We're definitely going up, so I want to find the low point on that chart, kind of a double bottom here. I'll go back over here to the lowest point I can see, bring it up to the top of my chart, drop. Now let's pull it out, and we'll have a new high because today the euro hit a new high up here at the 145.30 level approximately, and a little pullback off that, not very much. And as you can see, even though this is a very big range here for this week, from bottom to top over 400 pips, you would expect a normal profit taking to pull it back to at least to 23 and more likely to 38. We haven't seen that. We just saw this slight pullback here of about only 40 pips, guys, so still very much showing strength to the upside. Now drop down then to your 30 minute, And there's our, our trading over the last couple of days on the 30-minute. I do want to stress this here. Optimally, guys, optimally, the Rubicon works at its very best on the 30-minute chart. Now, many of you heard me say that I like the 15. I do like the 15 quite a bit because many times it'll give me earlier entries. However, I want to be very clear on this because I ran into it in coaching this week, and it could very well be my fault. So I'm going to be very specific. If you're trading on the 15, let's drop down to the 15. Always, for optimal, higher probability trading, make sure that the chart above you, being the 30-minute, is consistent with the direction that you're going with. Now, what I mean by that is, in this case here, we see a series of long trades on the 15-minute. Make sure that the 30-minute is also at very least above the spine, going in the same direction. And even better than that, if the hour is going with you, all the stronger. In other words, you're getting the big tsunami wave coming with you instead of just a small little wave. You're looking for the tsunami of all the time frames lining up in your favor. And in this case, it would be the daily, the 4-hour, the 1 hour, the 30-minute, all going long, all above the spine. That gives me pretty great comfort then dropping to the 15. If that's not the case, guys, then stay on the 30. So I want to be very specific with that. When I say I like the 30, I do, but I'm saying that in the context of you must do your drill down first. Please, guys, do the drill down that we just did. If you're going to trade on the 15, make sure that it's consistent with the higher time frames, the 30-minute, and preferably even the 1 hour as well. If you do that, you're fine. The trades will go in your favor. If you see a turnover on the 15 or 30-minute, then don't do it. Go back up to the 30-minute. And let's take a look at the 30-minute chart. So what we got here, let's take a look at, well, from yesterday. So we get an entry here.
Sell signal occurred.
There's a sell signal coming in right now. The buy is at 42.21. Now we reach 42.17 and we 18 or 17, and we get a little stall and start pulling back. Please remember, guys, if you're manually trading, I never have any problem taking profit right there, a couple of pips away from my target. That's fine with me. However, if you decide to stay in, it pulls back about 19 pips. It does not hit our stop loss, which is 30 pips away. And then over here, it comes back, and bingo, in we go, and we get your 20 pips out of that trade. Now, next trade over here, entry signal here. Again, it pulled back, and then she hits, we get a second signal entering over here. Sorry, the first stop loss is all the way down here. And then you get a subsequent signal coming back on the same line with a higher, with a different or higher profit target. Take the second one, that's 19 pips. Now, what do we do here? Please pay attention, guys. Remember, at this point, we're now up at the 4,500 level. We have seen in this particular wave an incredible amount of trades already happen. You have to know as a trader that sometime this thing is going to get exhausted and it's going to pull back. Even if it simply means professional and indeed amateur traders realizing, whoa, we're up at the 145 level, it's time to take profit. Don't be silly. I mean, don't just willy-nilly take everything that comes at you. Ask yourself the questions that we're asking right here. Now, there are other trades in there, but personally, above and beyond the 145 level, I was not taking them because this thing was exhausted. Even though the other trades were hit. I'm just saying, bear in mind what has happened. And again, the important thing to remember is what we spoke about